Well, we're here again today, another historic day for the stock market with Mark Collingsworth of Vere Global. Mark, a 3,000 point drop today. Wow. Where do we go tomorrow?
Well, based on history, when you have a market sell-off like that, and I'll use the '87 market crash as a reference point, you normally see, fairly strong rallies the day after, especially when you get some of the market indicators like the VIX and the greed index and put-to-call ratios hitting the extreme levels they've already hit. A rally is almost guaranteed, but we didn't get a rally today. We got a sell-off, which is very unusual when those indicators go to those extremes.
Yeah, I mean, we're in uncharted waters here, are we not?
You really are today. Today was really historical on multiple levels.
All right, now for tomorrow, it's hard to tell what's going to happen tomorrow, and it's hard to tell where the bottom may be, when it may come, and if it may come, if it's in sight or out of sight, correct?
Correct. Historically, when you try to predict market bottoms like this, you can look at economic indicators to say, the economy is starting to bottom out. But this sell-off is not related to the economy; it's related to a virus. And I think the key thing to look at, if you're trying to time a market bottom based on the virus, you really need to see a decline in the number of new outbreaks occurring both here domestically and internationally.
So, for nervous investors, what is your advice when the markets open tomorrow?
Well, tomorrow we should see a bounce just based on the history of large sell-offs. And of course, be patient. If there's some stocks in your portfolio that you don't want to own, there's some stocks that have more exposure to like the oil industry. You may want to lighten up on energy, but invest in strong, stable companies. Your MasterCards, companies that will be around. You may not pick the absolute bottom, but this virus will eventually go away. And when it goes away, the stock market should start doing much, much better.
So, this is not the time to cash out and head for the hills.
Not at this point, but things have changed so quickly here in the last 24 hours, Larry. Who knows what tomorrow will bring?
Yeah, well, also the Fed has cut its interest rate to zero, and it didn't have any effect, at least for today. Will it have an effect to stabilize the market?
Long term, it does. The things that the Fed announced yesterday with the QE program and cutting rates to zero, historically, that has actually supported the market. But I think in this situation, in the past when it supported the market, it was these events help economic problems. Cutting interest rates to zero doesn't make a person leave their house and go shopping. So they're using maybe the wrong medicine for the wrong symptoms.
Now, part of the market drop, the precipitous drop later in the day, was Trump saying that this could go on for months and months now, and finally getting less optimistic about the road ahead, and that seemed to shake the
Correct.
market. So now, is that just a transitory thing, and that after Trump's announcement today, people will absorb it and not be so alarmed come tomorrow?
Well, that's the problem. If this really does stretch out till August, like right now, we're kind of in that window that the slowdown we're seeing won't cause a recession. But if we start stretching this thing out from a few weeks to several months, we'll end up having a recession and people will start losing jobs and so forth. And that brings in a whole nother problem into the equation.
Well, Trump himself said today in the press conference this afternoon, before the markets close, a little while before the markets close, that a recession is possible. Now, coming from Trump, that's a major shaker of the market, is it not?
That's correct. And the market actually started selling off when he said that.
So, again, come tomorrow when the markets open, what happens? What's your best guess?
I think, based on history, we'll see a rally. But like I said, there's been so many indicators like the VIX at like 80 something. You got the only time you can see the VIX, it's a measure of fear. It's called the fear index. You have
Yeah.
to go back to the day of Lehman Brothers to find anything even close to that.
Yeah. Now, also, you said a factor here is the commercial paper market. What's going on there?
Well, over this last several years, a lot of companies have issued, energy companies in particular, have issued commercial paper. These are short-term pieces of paper, like a bond, but they mature in three months, 6 months, no longer than a year. And so now money market accounts have been buying these pieces of commercial paper issued by these energy companies. Well, anytime you buy something, somebody has to be willing to sell it. And anytime someone wants to sell something, they can be willing to buy it. Well, right now, if in the energy market, nobody wants to buy commercial paper, so that market's starting to freeze up. And the reason why it's so dangerous is so many people, you may not own stocks, but a lot of people own money market accounts, just like when Lehman Brothers commercial paper went bankrupt with Lehman Brothers, and that's where you saw the money market accounts actually break the dollar, or break the buck, as they call it.
Well, again, that seems like a very negative element adding to the mix now, and a toxic mix. So again, this deepens the trouble that we're in, does it not?
It is. It seems like the coronavirus has added a certain set of problems that the market is having a hard time digesting. The problems with the energy market is now adding additional problems onto it, and you're starting to see just a slow breakdown of new problems starting to raise their head that would, in theory, never raise their heads outside of these two events occurring at the same time.
Yeah, now with the oil markets dropped to what, $30 a barrel, and that is not sustainable for especially the smaller oil companies, correct?
Correct. The smaller oil companies will probably end up going bankrupt over this. And even your larger oil companies, back when oil was trading at $55 and $60 a barrel, when they did their budgets, they budgeted for oil to be at a bare minimum of 40 for those projects to remain profitable. Well, now that we're well below 40, all those budgets and all that planning they did is completely out the window.
So how much more destructive will that be to the entire picture with the stock market?
Well, you're going to see probably your smaller oil companies will go out of business. I'm talking like your really small ones, but the ones that really have the biggest impact, your really big companies like Exxon's, British Petroleum, and such. Those companies, at a bare minimum, are going to have to start firing people here in the near future. And when you start firing people, now that's when you start having a recessionary element coming into the stock market.
Yeah, well, you said surprisingly, at least to me, you're saying that despite China, with where the virus originated, as far as we know, their stock market is doing fairly well.
Yeah, their stock market's only down about 6% on the year. And even then, the only reason it's down 6 is because we're kind of dragging it down as U.S. investors try to sell Chinese positions. But the Chinese really did a great job on crushing this coronavirus.
So might we follow the same pattern? If we get it under control, our stock market will also bounce back as it has done surprisingly in China.
Correct. And we actually even have a little bit of, I guess, precedence on this, is when SARS broke out, about 15 years ago in China as well. China jumped on it very quickly. The United States started coming up with a game plan before it even got outside of China. The U.S. already had a game plan, and the United States actually lent assistance to China to help them with that problem. And SARS was much, much more deadlier than the coronavirus. But this time, the Chinese are saying that the U.S. started this biological weapon, and so they're bickering. Politics is starting to get mixed into this. So it's starting to have an impact on confidence that no one's really working together to fix this problem in the governments.
Now, Mark, the stock market was halted twice already this week, I believe. Any chance of that happening again tomorrow? And any chance of the stock market suspending operations for a while, as some people are suggesting?
When you say suspend, I'm assuming you mean actually shut the entire thing down.
Right.
I think that could possibly be a mistake, because once you shut it, you don't know what's going to happen when you reopen it. Just like when the market was shut down in 2011, it was shut down for almost 2 weeks, and you reopened it, and it just day after day, you had huge amounts of selling pressure come in. So maybe you should just leave it open and just let it run its course versus scaring people additionally by shutting it down.
Now, how about these circuit breakers? Are we going to continue to see more of those?
Funny thing there, the circuit breakers were created after the 1987 crash, and I think we've only used circuit breakers have only kicked in maybe once, maybe twice since 1987. We've had circuit breakers kick in, I've lost count, 3-4 times just in the last 5 days.
So will we see more of that tomorrow, or are they going to? Can they put the brakes on that, or is it automatically in the system now? If the market reaches a certain point, it automatically kicks in, or can they suspend that automatic kick in.
They can suspend it, and if you're curious, the circuit breakers have also, in the last few weeks, have also kicked in on the top side. Whereas they stop trading when they go down, they also stop trading when they go up.
All right. Well, Mark, everything is in flux, and I know that you're following it carefully. And we'll be talking with you tomorrow when we see what the day brings there on Wall Street. Mark Collingsworth of Vere Global. You're still smiling. I guess that's a good sign.
Well, I've been here a lot of times, Larry. I'm getting used to it over the last 30 years.
I know you've been through a lot of these ups and downs, although people are saying this is like none other. This is. Would you compare it with the kind of volatility we saw prior to the Great Depression and the crash of '29? Are we at that point now? We're into that kind of precursor?
I don't think so. The Great Depression had a whole lot of problems that kind of all manifested itself at the same time. You had bad fiscal policy, bad monetary policy. You had the Federal Reserve raising interest rates going into recession. You had the government raising taxes going into recession. You had banks prior to 1930. Banks could actually take the money that you deposited, your hard-earned money, and actually go out and speculate in the stock market with it.
So, therefore, closing comment for today. Tomorrow, there's hope. Tomorrow, there's darkness. What happens tomorrow? Closing remark.
I think you'll get a bounce. And this, I'll say this much. There's no signs right now. There's no signs of an economic recession occurring. I mean, the jobs are still being created. Amazon announced today they're going to hire 100,000 people to help get these products out that more people are buying from Amazon online versus actually going to the store. So that's a plus. But if this thing keeps on getting stretched out and the media keeps scaring people, they could create a recession, which now creates a whole brand new problem to the stock market.
All right, we shall see. And we'll probably be talking to you tomorrow when the market's open. Mark Collingsworth of Global, thanks for being with us.
Anytime.